Hi, I'm John from Genesis Block, and today we're going to talk about non-fungible tokens, or NFTs. Most of the crypto space up until this point has been caught up in Bitcoin and other major cryptocurrencies. But I'm sure all of you have heard of the latest NFT boom. This currency is referred to as the future of gaming, art, and even real estate. NFTs are able to draw some serious big money, with being priced at hundreds of thousands of dollars and even millions. So now let's take a deeper dive in how these tokens work. So now let's talk about non-fungible tokens and what makes them so special. The reason why NFTs are so special and useful is because they're tokens that have unique attributes that make it impossible to be replaced or exchanged one-to-one. The three crucial attributes of NFTs are unique, rare, and indivisible. NFT tokens are also ERC compatible, meaning they are used for crypto collectibles like art pieces and gaming. With these tokens, users have the ability to easily authenticate ownership and transfer over their assets. You can basically think of these tokens as a tokenized version of real-world assets or digital assets. So let's talk a little bit about the history of NFTs. When did they start? NFTs basically gained its momentum in 2017 with the explosion of the crypto game CryptoKitties. The game allowed users to collect, store, and sell virtual cats. The game allows users to collect, store, and sell virtual cats. It's quite an interesting concept, and in December of that year, CryptoKitties transactions was able to account for 12,000 transactions as a result in the increase of birthing fees. The game allowed users to collect, store, and sell virtual cats. It's quite an interesting concept, and in December of that year, CryptoKitties transactions was able to account for 12,000 as a result of the increase in birthing fees for kittens. Now you may ask, what makes this kind of token so exciting? The main reason is that they provide users with a sense of ownership and the ability to authenticate their ownership with rights. With NFTs, it allows assets to move easily around, and moreover, NFTs are transferable, meaning different items can be used in different games or traded from user to user. This creates a completely connected network, and it solves the problem in some cases of some special items only being in one game and not being used in another. Lastly, NFTs provide authenticity. It provides buyers with confidence when buying an asset. It's also important to note that NFTs can be big money, just like printing a diamond or a one-of-a-kind painting. So what are some of the pros and cons of an NFT token? The pros of the token, as mentioned before, is that it can transform ownership and make it much easier to own real-world assets. The token can help unlock new revenue streams in industries like gaming, tech, art, and real estate. Lastly, it can introduce millions of people to cryptocurrencies. With its obvious upsides, there are also some cons. The negative side of the token is that building dApps may be difficult and time-consuming. This may be too difficult for the normal user to understand and will need to be simplified for future usage. And lastly, the possibility of short selling some of the assets can make the market extremely unstable. Despite the negatives of NFTs, the future of NFTs looks extremely bright and promising. NFTs have already received recognition from brands like Formula One, Ubisoft, Vodafone, Nike, NFL, NBA, Samsung, Louis Vuitton, and many more. This goes to show the limitless potential of the token, and it's just getting started. Moreover, with the addition of new interactive platforms, it provides a safe space for users and developers to test and experiment with NFTs. So now let's get a little bit more granular with some of the use cases of NFTs and how it pertains to art. So let's talk about the different types of NFT formats. The first and most common type of NFT is called EIP 721. An EIP simply means an Ethereum Improvement Proposal. Similar to the way that we have BIPs, EIPs suggest improvements to the Ethereum blockchain. 721 is the de facto NFT format. And how you can use this is in the context of art, collectibles, and even real assets like land, cars, and anything that you can imagine that is a one-of-a-kind. Another format for NFTs is called EIP 1155. This is a fungible, non-fungible token. I know that this can sound a bit confusing, but what we're talking about in principle is similar. So we are tokenizing a single asset or a single digital asset, and an 1155 contract can mean that this is multiple owners, or in some cases distributes royalties. So if you have an NFT that is 1155 and the IP for that NFT belongs to an individual who wants to collect royalties, anytime this NFT is traded, they receive royalties. This also means that if I wanted to sell a blue chip art piece, for example, you could auction this and have multiple owners. So say that one owner has 20% of that, and then the rest is distributed amongst many others. This is something that is possible with an 1155 NFT. Another way that you can use an EIP 1155 NFT that you might not be aware of is in the context of finance. So I'm sure many of you now have heard of SAPs or these launch pads to where there are some sort of restrictions to when you receive your tokens. So what you can do, instead of using a smart contract for distribution, you can put these tokens in an 1155 contract. And what that means from the user's perspective is that you'll receive tokens either linearly, so that means that it could be released on a block schedule, or it could be in steps, so perhaps once every month or once every quarter, for example, or it could be on a cliff. So after, say, 6 months, you receive a certain portion of the tokens, and thereafter they're released at another rate. Another way that some people are speculating that you could use 1155 is as a kind of virtual trust. So in a lot of regulated countries, like for example, the United States, every time you purchase a token, regardless of the cryptocurrency, that is a taxable event. But if you purchase the token and it goes to an 1155, it means that you're not taxed until those tokens come out of the NFT, and then you're taxed at that point instead of being taxed multiple times along the way. So outside of collectibles and art, there are a lot of ways that you can use NFTs, particularly 1155. And outside of art, we're already seeing a lot of applications for 721 and 1155 alike for redeemable assets, such as a redeemable shirt or redeemable Bitcoin tram, for example, like Labs, which is tokenizing real estate in the form of NFTs. So by buying that NFT, that shows you have ownership of that land. Fundamentally, one thing that is a common misconception is that NFTs aren't actually stored on the blockchain. And what I mean by that is that the image that you buy in the context of virtual collectibles, virtual art, isn't actually being stored on the blockchain. NFTs are merely an on-chain representation of off-chain ownership, whether that be land, cars, or if you bought art, that art in the virtual context is typically stored on IPFS. So these NFT tokens, which shows your on-chain ownership of off-chain data, is typically stored in IPFS, which means Interplanetary File System. This is a non-fungible way of storing data that is off-chain, but also non-fungible, just like the NFT. So to simply put what I just said, NFTs are more about ownership than the actual art or collectible, which is typically stored offline. But the real value for you as a user is that this information on the blockchain says that you and no one else owns the right to whatever it is that thing is. That could be art, that could be rights to music, that could be a car, it could be land, anything that you can think of that isn't something like cash, where if I give you $1, that's worth another $1. And then it's fungible and interchangeable. anything that's outside of that context can be turned into a non-fungible token and represent your ownership of that item. So now let's talk about the different kinds of blockchains that support NFTs. So now let's talk about the different major blockchains that support NFTs. Ethereum is the most common, and I'm sure all of you are aware of platforms like OpenSea, Rarible, and Nifty Gateway, and things like that. But BSC also has a lot of up-and-coming NFT platforms, such as Refinable. Another major blockchain that also supports NFTs is Solana. Solana is an up-and-coming blockchain that solves the impossible triangle of decentralization, security, and scalability that's backed by SBF. There are interesting NFT platforms like Solable, which was one of the first on Solana. However, there's also very interesting NFT platforms like OnlyOne, which is modeled after OnlyFans. All three of these blockchains have unique platforms and unique selling points for each of the platforms on their blockchain. I think that right now, it's yet to be determined which is the most effective, because undoubtedly, ETH has the most users. However, with the increase in gas prices, a lot of users, especially retail, went over to BSC. And Solana, even though it does have the best tech, in my perspective, it doesn't have enough users yet. So we are still at a stage where we're trying to determine which platform or blockchain is the best, and furthermore, how interchangeable this will be moving forward. The ideal situation is that all of these NFTs are agnostic and interchangeable from blockchain to blockchain. And there are many projects right now working on ways to shift NFTs from one blockchain to another, including platforms that provide NFTs that are blockchain agnostic. I think it's also worth talking about redeemable NFTs and the potential application for these. So one thing that we have worked on at Genesis Block is after we did our Bitcoin tram campaign in Hong Kong, we made redeemable NFT tram models. We only made 200 of them, and we put some of them up for auction on Solable, a Solana NFT platform. The users who bought these NFTs could redeem them for a physical Bitcoin tram. And if you've seen what's happening on FTX, they have redeemable NFTs for hoodies and t-shirts that are now selling for tens of thousands of dollars. In the context of those NFTs, it would be foolish for the user to redeem them. And in some cases, you can make these NFTs, again going back to 1155, to where you can actually have them redeemable, but also not burned. The example I just gave for a Bitcoin trams, we burned the NFTs in order for the user to receive the tram. However, what you could do, for example, is take a blue chip art piece, have that as a redeemable NFT. The user could redeem the NFT to have the physical art piece in their house, but also keep the NFT as something that is tradable in the secondary market. There's many applications for how this could play out, especially in the context of, say, for example, like a dinner or lunch with SBF or some other industry leader, to where you redeem that for the actual lunch, but it's also tradable as something in the secondary market. It's up to the users that determine the value of these, because the bidding price ultimately determines the price. But I think that it's something interesting and unique to cryptocurrencies. Now I'd like to introduce our community manager, Max. He's going to ask me some questions that our community members commonly ask him.
All right, John. Pleasure to be here. So for a few questions that we have from our community members are, how do you know an NFT is authentic?
So that's a good question. And actually, there are a number of cases of fake NFTs being sold, even on major platforms like OpenSea. Someone we know the other day bought a fake NFT. This happened because they didn't look for the blue check next to the artist's profile. And what you can do on, what is it? Etherscan. So what you can do to double check any NFT transaction is take the smart contract for the NFT, look it up in etherscan.io. Once you look at the smart contract for that NFT, if you scroll down to the bottom, you can see that the visual representation is stored on IPFS. That's the easiest way for you or anyone to know that this NFT is real. First and foremost, they have the check next to their name on platforms like OpenSea. If it isn't on somewhere like OpenSea that provides that verification, you can look at the smart contract itself, and basically look for the storage of the physical representation being on IPFS, if it is indeed a digital NFT. In other cases, you can also look at the smart contract to verify that this does pertain to the ownership of, for example, land or a car or some sort of physical art piece. This is the easiest way for you, I, or anyone to verify the authenticity of the NFT. Basically, the easiest way is to make sure you're using a legitimate platform that has a way for you to verify the author. And then second of all, if that's not the case, you can look at the smart contract and make sure that all the boxes are ticked as far as this being something that's legitimate, whether that be IPFS storage or an actual smart contract that pertains to the land itself or whatever else you might be trying to buy.
Thank you for sharing this helpful information, John. Another question we have is, do you think the NFT trend is here to stay?
So I definitely think NFTs are here to stay. I think that guys like Yats from Animoca have pioneered NFT gaming. Collectibles definitely seem like they're here to stay as well. However, I think that the most common use case has yet to be established, especially in the context of financial opportunities for what I mentioned earlier with how you can use an NFT to distribute SAFT allocations, for example, or in the case of land or car, what have you. I think NFTs are a great way to provide a means of ownership for something, and it offsets a lot of the legal due diligence that you have to do in most cases. Furthermore, I think that NFTs in the context of concert tickets and things like this, which undoubtedly because of COVID, we haven't seen many uses yet, it makes a lot of sense, right? I bought a ticket and this is unique to my seat in this concert. And I think that in a smaller, more granular scale, as far as not being some sort of Beeple $69 million piece, is something that has a very effective use case for that ticket, right? There's all kinds of fabrication happening when you go to a concert and there's scalpers and you buy a ticket and that scalp ticket is actually fake. In the context of an NFT, I think that concerts and things like that are actually a really great application. So NFTs are here to stay. I think that, the cases we are seeing for NFT gaming, collectibles, things like that, there is a place for that. But I, again, do believe that the most common use case for NFTs has yet to be seen.
Right. So you mentioned several different use cases. Realistically, where do you see kind of the mass adoption in the next 5 years of NFTs?
So I think right now, what's going to drive adoption for NFTs is going to be NFT gaming, with guys like Animoca's F1 Delta, with games like Ethermon and countless others. Superfarm is working on a AAA rated game that's now being tested on Steam. And I think the tech savviness of gamers is much higher than your average retail, as far as them coming into the space and not needing as much education. And that'll really fuel everyone else getting on board. Because once these guys figure it out, they're going to be the ones that disseminate the knowledge to the mass market. So I think in the next 5 years, NFT gaming, in my opinion, is going to be the key driver. And then beyond that, in a more kind of niche vein, art is definitely going to be there, right?
So what do you think about Christie's selling NFTs?
So I think that's a really good point, and this is kind of the springboard for everyone else's kind of interest in NFTs as far as that becoming something that's exploded in the past few months. I think that there is a misunderstanding for most people about the piece as far as why it was priced at over $69 million. It's actually 5,000 pieces in one. He made a piece every day, and each one of those little not pixels, but small images is actually a piece you can blow up, and it's a piece in and of itself. So I think that's the first misconception about the piece. And why would someone pay this much? I think first of all, Beeple is a well-established digital artist for a while. So I think that people who really appreciate him do think that it does hold that value. But I think that the real opportunity for artists is that this is a bridge for them to really get known. I think there's a lot of artists out there that don't really have a platform to get themselves recognized. And I think NFTs gives them that opportunity to get in touch and get their pieces listed on platforms like Christie's. And I think that what they're doing is, pretty fantastic because they're being very forward thinking and understanding the opportunity here. I mean, yes, it's not a tangible physical piece and they are selling for the same prices as blue chip art. However, I think that with this new generation getting more money and people having interest in digital art to the user, right? I think art is very subjective. And to the people that are buying these digital art pieces, it has as much value to them as a blue chip traditional art piece does. So I think that what Christie's is doing is pretty great because it's providing artists the ability to get involved with NFTs and potentially down the line get listed on platforms like Christie's.
Right. And lastly, for our moon boys out there, what would you say are the most lucrative ways to earn money on NFTs right now?
So I'm not here to solicit financial advice, and this is not financial advice. This is just me speculating on what I've seen. And I think that, it depends on your approach, right? Do you want to make money quickly, or do you want to invest in something you believe that will appreciate in value? So I think the easiest way for a user to make money right now would be to utilize platforms like Chain Guardians and Yield Farm. Beyond that, as far as making short to mid-term gains, I'm sure you've heard about the ape trend that happened recently.
Yes, of course.
I'm not going to speculate too much as far as what was the price driver, but if you pick an NFT, if you pick an NFT artist with a good community, like those apes that I'm sure you saw recently, to where 1 week you could have bought one for $300-400, and then 2-3 weeks later sold it for 4 or 5 ETH. That's another way, but that requires the user to have an understanding of market trends, as well as being really plugged into the crypto community to understand when is the time to buy and sell. And I think more longer term thinking, if you were to say buy a piece by Beeple or something that's kind of like blue chip NFT art, that should appreciate if it follows the same kind of guidelines that traditional art does over time, right? So if you bought it at Beeple now, the assumption would be that it would appreciate more and more the longer it gets, right? Especially, I hope Beeple doesn't die, but when artists die, their pieces appreciate by a lot of money. So there's a number of ways you can make money off of NFTs, and that's just in the context of art. Outside of the context of art, of course, if you bought NFT land, like real land in the form of NFT, I mean, the global population doesn't look like it's going to go down, so land should go up in value. So that's another way you can make money. It really depends on your approach. If you're trying to get short-term, immediate gains, yield farming or NFT mining are probably the quickest ways to make money today. If you want to make short to mid-term gains, following these NFT communities that have artists that have strong support and good trade volume, I think that's another way, like with the apes. And then longer term, going back to the example of like buying like a blue chip NFT such as like Beeple, or buying NFT land from guys like, perhaps like Labs or whoever else is doing this NFT land, right? Because you're not just buying an NFT, that NFT represents ownership of physical land, and physical land should go up in value just based on the concept of supply and demand. And there's only going to be more people, right?
Well, that pretty much covers our community question, John. Thank you very much for sharing this insightful information.
Thanks, Max. Thanks for your questions. Now I'd like to show you some content from some of the projects that we've invested in on the GBV and Genesis block side.
Most of the crypto space has been caught up with Bitcoin and other cryptocurrencies, but one currency has been quietly gaining popularity. This currency is NFT, and it is referred to as the future of the gaming industry, art industry, and even the real estate industry. NFTs are able to draw some serious big money, with some being priced at hundreds of thousands of dollars. So now let's dive deeper into how these tokens work. To better understand NFTs, we have to understand the concept of fungibility. This concept is simple, and it basically refers to items that you can use every day. You can think of these items being your physical cash or even the digital Bitcoin. Let's talk about why non-fungible tokens are so special. The reason why NFTs are as special and useful as they are is because the tokens have unique attributes that make it impossible for them to be replaced or exchanged. The three crucial attributes of NFTs are unique, rare, and indivisible. NFT tokens are also ERC 720 complaint, meaning they are used for crypto collectibles, like art pieces and gaming. With the token, users are able to easily have authenticity and ownership over their assets. You can basically think of these tokens as a tokenized version of real-world or digital assets. So let's talk a little history. When did NFT start? NFT basically gained its momentum in 2017 with the explosion of the crypto game CryptoKitties. The game allowed users to collect, store, and sell virtual cats. It is a quite interesting concept, and in December that year, CryptoKitties transactions was able to account for 12,000 transactions as a result of the increase in birthing fees for kittens. Just recently, F1 Delta Time, a race car game, sold a race car for 415.9 ETH. Even though it didn't beat the kitty that sold for 600 ETH, it shows how valuable some of these assets can be. Now you may ask, what makes this token so exciting? The main reason is that they provide users with a sense of ownership and ability to authenticate their ownership rights. With NFTs, it will allow assets to move easily around. Moreover, NFTs are transferable, meaning different items can be used in different games. This creates a completely connected network and solves the problem of some special items only being in one game and not being able to be used in another game. Lastly, NFT provides authenticity. It provides buyers confidence when buying an asset. It is important to note here that NFTs can be big money, just like a diamond or a one-of-a-kind painting. So what are some of the pros and cons of the token? The pros of the token are, as mentioned before, it could transform the ownership and make it much easier to own real-world assets. The token can also help unlock a new revenue stream in industries like gaming, tech, and art. Lastly, it can introduce millions of people to cryptocurrencies. With its obvious upsides, there also remains some cons. The negative side of the token is that the building of dApps may be difficult and time-consuming. This may be too difficult for normal users to understand and will need to be simplified for future usage. And lastly, the possibility of short selling of assets can make the market extremely unstable. Despite the negatives of NFT, the future of NFT looks extremely bright and promising. NFT has already received recognition from brands like Formula One, Ubisoft, Vodafone, Nike, NFL, NBA, Samsung, Louis Vuitton, and more. This goes to show the limitless potential of the token and how it is just getting started. Moreover, with the addition of new interactive platforms, it provides a safe space for users and developers to test and experiment with NFT. Have you ever heard or used an online crypto gaming platform before? Well, today you will learn all about it. Welcome back to another episode of the Crypto Classroom. I'm Angelica from Genesis Block, and today we'll be talking about decentral games. The Decentral Games platform is a community-governed metaverse casino that is all powered by DG. On this platform, players can earn DG rewards by simply playing games. Doesn't that just sound awesome? LPs can also earn DG by providing liquidity, and holders can earn DG by participating in the governance of the casino house fund's treasury. So let's dive into the Decentral Games ecosystem. The Decentral Games ecosystem has blackjack, roulette, slots, and backgammon. There are also 3 casinos, which are Chateau Satoshi, Tomonoya, and Serenity Island. In order to align with Decentral Games community development, 62% of the DG supply will be distributed to the community to help incentivize participation in gameplay, provision of liquidity, and governance rewards. The platform revolves closely around the DG Treasury, which is an open and transparent casino house fund's treasury that would bankroll all games. All the fees, which are calculated mana and DAI, will be collected in this treasury, and it will also help pay out players' winnings. And to promote the community governance aspect of the network, DG will also allow holders to propose and vote on governance proposals to help determine various features and perimeters for the Decentral Games ecosystem. The voting weights will be calculated depending on a user's token holding, and the right to vote is restricted solely to voting on features of the Decentral Games ecosystem and the development of new features through the allocation of treasury funds. Note here that the right to vote does not mean that DG holders will have control or operation of the company. Now, having talked so much about the ecosystem, let's move on to talk about the native token DG. The DG token is a native utility token for the Decentral Games ecosystem. The token plays an important role in the platform as it ensures proper functioning of the ecosystem. It is used as a medium of exchange between participants in the decentral games ecosystem. With the DG token, users can have a convenient yet secure way of payment and settlement in the ecosystem. The token is not meant to be used as a medium of exchange that is accepted by the public as a payment of goods or services. DG will also provide various economic incentives to attract users to contribute to the ecosystem. These rewards include gameplay rewards, liquidity incentives, as well as governance rewards. Check out our article below on how to earn DG to start earning DG. Moving forward, we have to talk a little about DG's overall governance. The main objective of DG governance is to evolve it into a DAO, where all decisions will be given to the community. The governance token will act as a governance instrument that will allow the community to vote on new game developments, allocation of house funds, and adjusting ecosystem perimeters to mitigate risk. This ensures the community to have a direct interaction with the platform, bringing decentral games closer to the community. Hi, and welcome back to another episode of the Crypto Classroom. I'm Angelica from Genesis Block, and today we'll be talking about Sandbox. How many of you guys out there have played a bunch of kid games in a sandbox as a kid? Well, let me tell you something revolutionary. There's a platform called Sandbox that is a virtual world that basically allows players to build, own, and monetize their gaming experiences. Built on the Ethereum blockchain, the platform utilizes Sand, the platform's utility token, to achieve a one-of-a-kind experience. So how did this platform start? The team behind Sandbox has a strong vision to create a metaverse that will allow players to create virtual worlds together. Pretty cool, right? You can think of this being very similar to Minecraft, where you can build with your own friends. The one crucial key with Sandbox is that it does not have a central authority, meaning it will provide users with true ownership of their creations and assets. This platform will disrupt the existing gaming industry, with most game makers like Minecraft and Roblox not being able to provide users with ownership. With Sandbox, the fundamental issues of the gaming market can be solved. There are three integral parts of the Sandbox ecosystem that work together to help create a unique experience. The Sandbox platform allows users to experience a comprehensive user-generated content production. The first part of the Sandbox ecosystem that makes it so successful is Vox Edit. Vox Edit is a simple and powerful tool that allows users to create and animate 3D objects. With Vox Edit, you can create people, animals, foliage, and tools. All of these objects can also be exported onto the Sandbox marketplace, becoming in-game assets. Another part of the Sandbox ecosystem is the marketplace. The marketplace is a place that will allow users to publicly upload and sell their creations made on Vox Edit. The creations will be sold as tokens, mainly ERC721 and ERC1155. The last part of the Sandbox ecosystem is the Game Maker. The Game Maker allows anyone that owns assets to utilize them in the virtual world. When in the Game Maker mode, the users can decorate their land with assets. This can help create interesting gameplay mechanics and a full gaming experience. Having mentioned all that, it is important to know a little about the technical structure of Sandbox. Sandbox runs exclusively on Ethereum. By running on Ethereum, users are able to sell, transfer, or use tokens without any restrictions. To store the information of the assets, the IPFS is used to ensure that information cannot be changed without a permission from the owners. Moreover, to optimize the gameplay of the platform, Sandbox uses a game engine built on Unity. The platform uses Unity's universal render pipeline, which supports mobile games without sacrificing quality. Above all, the tool also supports custom voxel models, rigging, and animation formats from Vox Edit. To best facilitate the transactions on the Sandbox platform, the Sand token and ERC20 utility token built on Ethereum will serve as the basis of all transactions. The following are few use cases of Sand: access to Sandbox platform, governance of the Sandbox platform, staking Sand tokens on the platform, a fee capture model where 5% of all transaction volume will be carried out in Sand tokens and split equally to the staking pool and the foundation. Last but not least, the Sand tokens are also used in the foundation, which supports the ecosystem of Sandbox. The foundation will provide grants that will incentivize high-quality content and game production on the platform. With the continual growth of the gaming industry, the Sandbox platform is bound to win. It provides true ownership for users, security, a fair revenue share, and decentralized trading. What's there not to love, especially when you can be playing your favorite video games? And that will wrap it up for our video. If you like our video, please make sure to like and subscribe. Leave a comment down below if you have any questions. Until next time.
Thanks for joining our session on NFTs. We hope you learned something, and if you'd like to learn more, we provide free education through our crypto classroom. So if you'd like to learn more about NFTs, Bitcoin, or blockchain, check out the link right here.